Everyone, and welcome to Morning Market Movers, where we do live analysis for day trading and take a look at hotspots in the markets for today, Wednesday, May 4th. It is both Fed Day. We've got the Fed going to make their announcement at 2 p.m. this afternoon on the interest rate decision. We'll get some color commentary as well on how quickly they're going to try to reduce their balance sheet. It is also Star Wars Day. So May the 4th. What are we going to be talking about today? We've got the movers today are energy. The story hasn't changed. Demand, supply looking to get cut off from Russia. Uh, Clearly, we've got with supply going down, demand going up. Both nat gas and oil on the move to the upside. We just did get our ADP private payrolls, non-farm payroll. That's the private sector. Didn't come in as high as expected. Came in lower than expected, but they adjusted the last number. Brian will talk a little bit about that. And then when it look across equities, everything's kind of what's going to happen. What are people going to do? How are they going to react? Where we're seeing volatility is in individual names. Earnings. We're still in the midst of earnings season. Lyft. Listen, when you miss now, negative news is amplified. Lyft is down 25%, absolutely crushing it. Meanwhile, if you do really, really well, like Moderna, AMD, and the microchips, Airbnb, all doing better than expected, they're up 5 or 6 or 7%. So upside, there is some in individual names. Downside, there's a lot. Still very negative sentiment generically in individual names. Oh, by the way, I didn't introduce us. I'm Todd Rich with Nadex, and with me, Brian Caprice from Keep Trading Simple, in case you're new here and haven't joined us before. Before I flip it over and we look at the energies and we look at the equities, I mean, that's really kind of what everyone's talking about today. I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. And yeah, nat gas now approaching 8.5. Yikes. I mean, just exploding. I mean, and we know that Europe is stockpiling as much. I mean, you can chill natural gas. It's liquid in its liquid form. They are storing as much as they can in anticipation of not having, in anticipation of cutting off Russia. So both nat gas and oil taken off. Brian, I'm going to flip it over to you, and we could go through some of the other headlines, and then we can get into
Yeah,
the charts of the
there's some very
oil
interesting
and the energy.
headlines today. Yeah,
Yeah.
I mean headlines across the board. We were joking about it before. We talk about big names and players. How about this for a story? Whoops, not that. There's a Chinese man that was arrested with the surname Ma. Guys, Jack Ma. He has a little bit of control in China. It wiped off $26 billion worth of Alibaba stock price, 9.4% because a guy from the region where Alibaba is based got arrested. It's not Jack
It's
Ma.
not
This guy
him.
was born in this guy was born in 1985. Jack Ma was born in 1964. But $26 billion evaporated because of them selling because they're like, oh my god, the guy got arrested for like colluding with overseas anti-China hostile forces and to incite secession and incite subversion of state power. Again,
But
Jack's been
it's
pretty like,
not
hey,
even
it needs
yeah,
to be an open market.
it's not
So
even him. They just have the same last name.
yeah, talk
And
about
it's
the
like
expectation that like, oh yeah, Jack does all these things, Jack's next. So and Jack's already potentially disappeared once, but $26 billion gone
yeah.
just because of a guy with the same last name. Like imagine if like a Musk or a Buffett got arrested here. I mean, God knows what could happen, right? I mean, pretty funny stuff there. All right, so a couple other things out there that are of note today. I don't need this one anymore. This guy, right now the markets are more or less flat. Dollar Swiss, I'd mentioned that, again, there's no reason why you should be going kind of short this position yet. Switzerland is not in a great place. They've lost their neutrality status, so they're just a small country now, and they have the euro effect. Again, that's the biggest mover right now at 6.7%. The ADP number came out, and then just to correct Todd, It's not private sector, it's only ADP payroll.
Oh, ADP. Oh,
ADP
right,
does
right, right. It's
yeah, ADP does do, that was actually my first job out of college was ADP, and at that time they did what it was like 1 out of 3, I think paychecks were written by ADP in the United States for all employees. It's probably changed a little bit now, but, they do a lot. They're the largest payroll provider,
I
particularly
think
for
it's
small
still
businesses.
somewhere in that vicinity.
Yeah, it's probably 40 it's probably, like, between 35 and 45% of all payroll checks are written by ADP. They're huge in the auto industry, but this number, yeah, it does look negative, but there was a revision higher, so the baseline was kind of thrown higher up. It was already expected to be negative, but when it's here and you expect it to go down here, and all of a sudden, "Oops, sorry, we were wrong, it's here." This one obviously is, it's a little bit farther down. So, you know, it's red, but again, the baseline that it was starting with was a little bit off. So not great. But remember, ADP, there's a lot of people outside of this. And this is why whenever we see private sector versus public, we see like non-farm, that adds a component to it. When you talk about government workers, that adds another, aspect to it. So this number, it may be a monstrous number when we get it on Friday for the actual non-farm payroll number. So this is just a small subset. Remember, polling is not necessarily the most accurate either. So today, ISM will probably be a non-mover. Again, everybody is focused on Fed funds. I'm actually expecting not as much movement today. It has been well telegraphed this morning. Pretty much everybody online is talking about, hey, listen, there's going to be nothing today. They have telegraphed this raise so much at this point that there really shouldn't be any type of craziness with it. Now, if it comes in as a point 0.5 or a 0.75, then it's going to be like somebody's, smoking cigarettes and throwing matches inside of a fireworks factory. But right now, they're not expecting that the way that they have telegraphed this one. Um, is it going to be enough? Most people are saying it's absolutely not going to be enough, but the Fed is kind of just following this path of what they think it needs to be. Um, so they think that it's going to be pretty telegraphed. Now, there's a couple things here also that are in play with this one. There's an interesting actually warning coming out of Goldman. Again, does Goldman know things? Yeah, they kind of do. And they're talking about the dominance of the greenback is the root of the cause of global financial and economic crisis right now. And that the only solution is to replace a national currency with a global currency. So even more people out there, and again, a large name like Goldman saying the dollar needs to be replaced. This happens, this is even a bigger threat than what we have for inflation. So this is another thing out there, and it says these recent warnings are a backlash against the U.S. weaponization of the dollar against Russia. Right, noticing that this is going to be a trend in major junctures in global currencies. So it's not my opinion. This is now Goldman is jumping on board as well. Chief economist of the World Bank is also saying it. The World Bank is saying the same thing that I've been saying for the last month and a half. So this is going to come into play today. We'll see if the Fed is going to kind of look at that and say, maybe we should kind of take this under consideration. Um, Another thing too that is big news today, Beijing. I mentioned earlier in the week, I was like waiting to hear. I'm like, we should be hearing if Beijing is going to lock down. We haven't. Maybe that's a good thing. Beijing today closed down 40 subway stations, 158 bus routes. Why that's important and what it has to do with trading today. And I love this. What's the plot? It's not a plot. This is just their policy. They shut and they lock everything down. They have the ability to do that with the way that their government is formed. The Secretary General just said right now that there is absolutely no spare capacity in the world to replace potentially lost Russian oil barrels. It's nice that Europe thinks they're going to do it, but I've heard this before. Other people have said this. This is the OPEC Secretary General. So again, this is not a big deal. They're having a technical meeting. They're basically saying that China lockdowns are affecting oil demand, with some suggesting China is facing the biggest demand shock since early 2020. Okay, so there's demand shock. Does that mean that they're going to start producing more barrels? Answer
Well,
is
wait.
no.
Well, if they lock down the
There's less
demand,
demand.
yeah, there's going to be a lot less demand, which is actually going to give Europe an opportunity to grab what's out there and stockpile more of it because they know their
No.
future demand is going to be out of control. I don't. It is getting interesting. And by the way, I was reading here in the States, our COVID numbers are going up to the tune where there's places, cities where we should be putting masks back on, according to the guidelines, but no one has an appetite for it. So
Yeah,
here we go
Pfizer
again.
said that. Yeah, I mean, Pfizer said that they had first quarter of their pill. They were barely able to keep up with pill demand. But Pfizer's also being accused right now of price gouging and
Yeah.
monopolizing, pills and profiteering from COVID, which I can't say that I disagree with the author. But anyway, as far as the saying that there will be extra. There's not extra. I mean, that's why OPEC Plus is basically saying that from non-OPEC Plus participants, they're actually producing less less barrels per day than what they had originally forecast. So they're not able to actually meet the demand right now with everything. But OPEC, remember, OPEC Plus's their mission is price stability. We don't have price stability. If you look at this, this is all over the place. And again, you have the United States trying to get involved, releasing strategic reserve. That does nothing. China locking down provides some benefit. Again, all we're waiting for is basically China to say, yeah, we don't need to lock down. And remember, the first lockdown is now 10 days, almost 14 days into it. We know that Omicron only has about a 5-day kind of lifespan of when it's an issue. They're probably getting ready to start lifting the ban there as it moves into other areas. So again, it is Omicron, but remember, Omicron is one of those ones that blows through very, very fast, and it is gone as fast as it came. Once that opens back up again, it's going. So, and again, the European situation is really not so much gas, but it is scary that OPEC Plus is saying, yeah, the non-OPEC Plus people are not producing as much. They can't produce it, and the main guy says there's no way you're going to replace Russian oil. There's not enough oil in the world to be able to do it. And natural gas is the proof of it. I keep saying it day after day. Every time this thing pulls back, buy more. Yesterday morning, we were talking about it right over here. I said, hey, if we get a pullback, we need to buy more. It pulled back, and now we're up at 840. Did we touch 850? No, 848. We're right there. So it's nice that Russia's that they don't want to use the Russian oil, but eventually it comes down to a point is if your citizens are freezing and can't cook food and you can get Russian oil, you're going to buy Russian oil. That's the reality of it. Or your country's going to revolt and they're going to replace your government. Right now, the way that it's looking, Putin is going to win the Nobel Green Peace Award because everything that he's done with this is going to put so much emphasis on finding alternative. Paris Accords don't matter, right? Putin is what's going to get, basically all electric, everything else, because at this point, nobody wants to pay these prices for energy. So there's going to be more innovation. And remember, who's profiting the most from this? The energy companies.
Yeah.
So Todd and I were joking around before, the housing bubble. You guys remember the 2008 crash? The company that made the most money that year was Exxon, as well as they were getting oil subsidies all at the same time. So energy companies are making bank right now. So it's an interesting spot to be in. But as far as how we trade today, right now there's not really a whole lot of analysis you can do. The VIX is down, even though we have this 0.5 stellar interest rate. Nothing. It's actually driving down into here. There'll be a little bit of a pop. It's like, oh yeah, it's Fed day. It's been so telegraphed. There's absolutely no volatility movement in the European session, which kind of leads you to believe that it's going to go wah wah and do nothing. Dollar, it's coming down a little bit in preparation from it because it will be a retail trader trade, but it's not really moving much. ES, flat, sleeping. No European session movement. NQ, totally flat, sitting right on that 50 from where we were yesterday. Look at the chop back and forth, the indecision.
Sideways.
Total chop.
Yeah.
YM, chop. Right on the 50 again. Russell went a little bit higher, went to that 78. This is the only one that really moved yesterday. It's not really doing much. Twitter, overnight, dead, flat. Apple, flat. Tesla, flat. Okay. Natural gas is the big mover. Gold, we're at 0 right now. Gold not really moving. There's no kind of pre-movement in this one. And again, I do think gold is still a short as you raise it. It's not so much a retail trader trap, but again, it is an attempt. It's not going to work. We'll see this continue to push lower. And again, silver starting to move a little bit as well. Currencies, for the most part, Aussie dollar is the only one that is rallying. We did talk about that 71.50 yesterday as being an area where there is potential buying. I do think this is probably the best one as far as the currencies go because, again, I do think gold will go down. The dollar going up, yes, it's already in there, but once it is officially in, then banks and things like that will start moving more money to it because it's a guaranteed rate once it's in. They don't need to move it before because it's not guaranteed. There's no benefit for them to do it right now. Once it's in, there will be some movement in there. So there will be some kind of push out of it. But interestingly enough, it's curious to see Bitcoin up 3.3%. Bitcoin is now rallying because they're like, yeah, it's going to be a disappointment. We might as well kind of go back in this realm right now. So what I would say is look to see kind of some potential movement in this morning. Again, we do have oil inventory report. I did not pull the API. Let me pull it real fast. API. Inventory report. I'm just curious to see how far off it is. It came in as a big down draw. Not huge. I mean, it came in what? Forecast was minus 1.6. It came in as minus 3.4. So again, showing a big down draw. Not big, but
Right.
was a miss to the downside, which is positive for oil, and we've seen it go up a little bit. So we'll see what oil inventory looks like today. I don't know what the current forecast is. It is, yeah, minus 0.7. So again, that coming in could help energies a little bit more. But besides that, not really a ton besides OPEC, and I think we will get more information. And again, right now, yesterday was we're going to ban everything. There's no immediate deal in Russian oil ban at the meeting. They're still convening again, and what they're going to. The last kind of other headline was they don't have an agreement, but they said we're going to slowly phase it out. And yesterday was like, you know what, we're ready. We're going to cut it off. And now they're like, we're going to create a plan that we're going to phase it out in near term. So
Yeah,
I
they're
think
working
they've
on it.
realized that as much as they want to, and as much as they would love to just cut it loose, the reality is they just can't cut it loose. And the main supplier of oil, OPEC, knows it. They've said it. They've telegraphed it. So it's nice that everybody believes that that's the case. But and then also get ready for this tomorrow. The UK is ready. It's fourth. I thought this was actually fifth, not fourth. But again, counting sometimes in coffee is important. But they're going for the fourth one in a row. They're still seeing inflation rise, but their market is getting hit already. So this is kind of scary because it's their fourth 25 in a row. Inflation is still going higher, but it's also starting to hurt their economy already. So
Right.
it's an
And
interesting scenario playing out that.
yeah, those raising interest rates are going to eventually impact the economy. They have to impact the economy.
Yep.
Uh,
And that brings them up to 1%, which is where we're going to be today. So we're
that's the
seeing
theory.
1% is hurting the UK, and it's not slowing down inflation yet. So
yeah, which I would expect a similar. The expectation is we get up to that 1%.
Yeah.
It's
Yeah,
not, but
it's
it
going to do anything.
moves us in the right direction. Yeah.
Yeah, and all I'm going to say is if they only do a 0.5 and it goes to 0.75 because of China or anything else or any excuse that they say, it's gonna literally be a buy on every single thing you can buy. All the indices are going to go crazy if it comes in as a 0.25. If it comes in 0.5, I don't expect much movement. It comes in as a 0.75. If Bullard finally gets his way, there will be a shock to the dollar because nobody thinks that they they got the chutzpah to do that one. So we'll see.
We'll see what they have to say. We got that today
Yep.
at 2 p.m. Eastern. With that, any questions for Nadex, please email us, customerservice@nadex.com. Brian is accessible. You can email Brian, support@keeptradingsimple.com. I'm also available, todd.rich@nadex.com. I'm going to kind of quickly go through because, it's Fed Day. All the markets are sort of on pause. I mean, it's crazy. The VIX is down going into this event, which is a little bit of a surprise, which means the markets pretty much are expecting that 0.5. It's kind of priced in. We're seeing equities just move sideways. But again, we got to wait and see what they have to say. It's not just what they do, but it's also the context of it on anticipation for future rate changes.
Yeah, I think that's the most important thing.
And that's really what.
Excellent point. It's what's next.
Yeah, that's what everyone's going to be really waiting to hear, and what everyone's going to be waiting to catch when this afternoon. In the meantime, clearly the war, Russia's war in the Ukraine, is impacting. There's going to be supply issues with energy. Demand is up, supply is down. Oil, nat gas taken off, and nat gas is just going through the moon. I think that kind of covers it all. Brian and I will be back tomorrow. It is going to be an interesting day. We'll see what happens when the Fed speaks and how people pre-position going into the news, and then how the markets react afterwards. Brian and I'll be around tomorrow morning to help sort through it then. And in the meantime, good luck in the markets, everyone. We'll catch you tomorrow. Thanks for joining.